happens too. But we do have with us the management of Transport Corp. Saw a decent quarter with revenue growth in excess of 15%. However, margins were hit by fall in international freight rates in the seaways business, and that saw an EBIT decline of 15%. Vineet Agarwal, who's the managing director at the company, joins in now. Vineet, thank you so much for joining in. First up, just wanted a few pedantic details. If you could give us a sense of your revenue breakup in terms of volumes and realizations across all your verticals, and the outlook for the fourth quarter.
So revenue growth in all the businesses was quite robust. I think, post Diwali, things tend to slow down a bit, and which is reflected typically in quarter three, because quarter two is when the stocking takes place for Diwali and the festive season. But yes, freight business did reasonably well with a top line growth of almost 15%. The supply chain business did quite well with more than, for a 9-month, almost 25% growth. This is clearly in line with where automotive logistics has grown quite a lot. As we know that with the chip shortage, we saw a slowdown in the automotive sector, which has come back quite strongly in quarter two and as well as quarter three. The seaways business, actually revenues went up, even though we did not have
Vineet, most of what you're telling us, we have that in the numbers. We want to understand what's the outlook from here on. So for quarter four, what kind of a number are you looking at in terms of, you could guide us in terms of revenues, or you want to put a volume number out there? And for FY24 as well, if you could give us a brief guidance. Please go ahead. And
also, just to add to that, Vineet, the volume breakup. We have the revenue growth. We just wanted volume growth for the fourth quarter.
Yeah, so for us, it's not very easy to define volume, because volume is specific to the number of cars we moved or number of containers we moved. However,
Vineet, apologize for the break once again, but could you give us a sense, for demand going ahead? 10 to 15% is the revenue and the profit growth guidance that you had given for this year. You hold on to that. For the next year, if one had to hazard a growth estimate, what would that be?
Actually, volume growth has been quite good. And as I said, automotive sector is also doing reasonably well. Container movement is also quite robust. So the FY24 growth numbers are also looking at least a 10 to 15% on the top line and the similar on the bottom line. There is, of course, a little bit of a headwinds from a global recession perspective, where there could be some impact on exports. And also, but one thing is very clear, and what was also just mentioned by the Honorable Prime Minister, is that there is going to be, the budget will definitely focus on growth. There is absolutely a need for logistics sector to grow. And one of the ways it will grow is capex into infrastructure. And that has been the mainstay of the budget last year. And I do expect it to happen this year as well. It has a trickle-down effect. And as a country, we need to bring down our logistics cost, specifically move it to multimodal logistics. And that's also our company strategy, where we do road, rail, sea, logistics, and we are seeing growth in all sectors.
So in that case, what do you think would your medium-term revenue mix move to? Because as we speak right now, freight accounts for about half of your revenues. A smaller contribution comes in from seaways, where you believe that, cost of acquiring a ship is extremely expensive right now. And then you have supply chain solutions. How does this revenue mix change in the next, say, foreseeable future?
So next 2 to 3 years, I don't expect it to change dramatically. I think this will continue. You have to see that all our businesses are delivering more than 20% ROCE. The freight business is actually delivering more than 25% ROCE. So the business is still quite robust. It doesn't have any major capex also requirements, only working capital requirements. So I think this mix will remain more or less the same in the next 2 to 3 years. But the quality of the business is improving, and hence the margins will also improve in the next 2 to 3 years.
You want to give us a margin outlook out there, Vineet? It'll improve to what levels, or by what quantum?
So the 15% that we are committing in terms of a guidance, I think that's the kind of a growth that we'll see year on year for the next 3 years at a CAGR level.
That's at the profit level, right?
That's right.
So EBITDA margins then would be maintained at current levels of around 12 to 13%, or is that tending towards 15% as well?
No, EBITDA doesn't need to grow to that extent for the profitability to grow at that level. So EBITDA could be at that 10-12%, but with volume growth, as well as the fact that we don't have any debt on our books, we should help to keep up the growth.
And quickly, before we let you go, you had an 80 crore target coming in for your cold chain business in FY23. The first 9 months, you've done about 50 45, 46 odd crores out there. Do you still hold on to that guidance, and what level does it go to in the next year?
Cold chain business is actually, we have rejigged our portfolio over there, and we've reduced some exposure into e-commerce related cold chain. But yes, so the business will come down. The guidance will not hold for this year. But next year, definitely we're looking at that 80 crores to 100 crores kind of a top line. It's a joint venture with an international company.
Okay, all right. Thanks so much for stopping by, Vineet, and filling us in with all those details. Looking forward to having a chat with you in the coming quarters as well. Well, let's move on.